Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Monday, January 25th, 2016. And here are some of today's trends in the news. Well, before we look at today's trends, let's look back a little bit. You remember what happened last week when those markets went up? Yeah. When Draghi, the ECB president, he was at Davos, that's right. And he was complaining in Davos when the markets were going down on Wednesday that we need more stimulus from the central banks. And Draghi came out and he promised more monetary meth for them money junkies. So this is the weekend report from the Financial Times. Stocks rise and crude recovers as ECB stance helps lift the gloom. Oh yeah, give that junkie some money, meth man. Lift that gloom. Make him happy. Brent pushes back to $31.50 a barrel, while U.S. equities head towards weekly gain, and Nikkei 225 climbs 5.9%. This was a disgrace. If anybody thinks it's a fair market, you should send your kids to Harvard, Princeton, Yale. Yeah, they tell the truth over there. What a joke. Markets pumped up on that crap. The fundamentals of the world economy did not change. So what do we have today? Well, over there in Asia, on average, if you added it all up, maybe up 1%. Down over there in Europe, maybe if you added it up, down 0.5%. And here in the United States, the market was up, the market was down, the market was up. The market closed down over 200 points. And you know what the big one is after reading that?
Warning, warning, bullshit alert.
Oil prices. Remember, in 48 hours last week, oil prices rose some 23%. Well, now they're down about 7% on average when you combine the two, West Texas and Brent. So now we have West Texas down to $29.75 and crude down to $30. Wall Street Journal today. Recent bounce fails to calm market fears. And they go on to list some things, why the market fears are still there. Transportation shares and a proportion of stocks are down more than 20% from recent highs. These signals, combined with the S&P 500 6.7% drop so far in 2016, have reinforced Wall Street's dour outlook as the bull market stumbles into its 7th year. One fact after another here, folks. Industrial production declined 10 out of the past 12 months. What else do we have here? Last week, Union Pacific Corp reported a 22% drop in fourth quarter earnings. 35 out of 45 major country stock indexes have fallen by 20% or more as of Friday. And then they have a thing in here. The U.S. economy is near full employment. Oh, yeah. You know what that is.
That was bullshit.
The labor force participation rate is at 1970s levels when women weren't in the workforce like they are today. And what do you got, about 93 million, 94 million people looking for work? But you know how it is under the USSA. Yeah, once you're no longer looking for work, once you no longer could find a job, you're not unemployed and you don't even count anymore. And then they have another story, and this is important. I'm mentioning this to you because whether it's the Financial Times, the New York Times, or Wall Street Journal today, plus other media, stories on Russian oil output and what it means. And in reading these stories, as you go through them, you see the kind of language that they use. And of course, there's a lot to report here. I can't do it all, and find more in the Trends Journal coming up soon. But to give you just a brief understanding of how propaganda works. And of course, they have the numbers here, you know, what Russia depends on. Russian oil production could fall by 10.5 million barrels a day, the IAE said, and sink to 9 million barrels by 2040. 2040, who cares? Mr. Putin said at the end of last year that the price of $50 per barrel of crude used to calculate Russia's 2016 budget was too optimistic. Isn't that something? He knew it was going to go lower, but all we kept hearing was hype over here. But here's the one I want to read to you. Russia's currency, the ruble, provided a lift for oil companies when it plunged in value after imposition of U.S. sanctions and initial drop in oil prices in 2014. It has since largely risen and fallen, with oil prices touching a record low Thursday of almost 86 to the U.S. dollar. You ready? Before Russia invaded Ukraine, a dollar bought 35 rubles. Russia did not invade Ukraine. We've gone over this in detail, how people like the Assistant Secretary of State, yeah, you remember, huh? Victoria Nuland, yeah, you remember, Chevron, Exxon over his shoulder, as she's saying the best path for the Ukraine to take is the one set forth by the IMF. We've written about this in detail. The Sochi Olympics were going on, and the West overthrew the democratically elected government of Yanukovych. Whether you liked him or not, he was a thief like the rest of them, not the issue. The fact is, this is a factual lie. Russia did not invade Ukraine, and they say it over and over again. It's propaganda. Oh, I was mentioning, one after another. That's the Wall Street Journal, front page in Saturday's New York Times. Plunging oil prices feed worker unrest in Russia. Yep. And you know what they do? They have a big photo down here. Workers at Sbarro restaurant in Moscow protested, claiming they had not been paid in months. It goes over here to say that Russia relies on energy exports for 50% of its federal budget, and that the GDP has recession, the GDP has shrunk 3.9%, and inflation is basically at 13%. Then you go inside, another photo. Sbarro workers protesting in Moscow. Russia's economy is dependent on oil, so revenue falls in tandem with oil prices. Sbarro. That's an American firm. It's an American fast food joint. But they make it look like Russia is the one that's not paying the people their wages. So there you got it. Propaganda. Moving on, oil majors among 175 resource groups in danger of rating cuts. One fact here after another, I'll only touch a couple of them. Several of the world's biggest oil and gas groups, including Royal Dutch Shell, Total, and Chesapeake Energy, are among 175 energy and mining companies at risk of rating downgrades following a collapse in crude and other commodities. Moody's has warned. Moody's has put on review for downgrades 69 U.S.-based companies. Thursday, 10,000 jobs were lost Schlumberger announced on Thursday that's how many they're cutting. One fact after another. Moody's notice for 120 energy companies and 55 miners is the largest single warning of potential corporate downgrades since the financial crisis. And remember, Brent is down some 75% from its high. We've been saying this longer than anybody, the effects that the banks are going to have by banking on all of this energy boom when oil prices were $100 and above. And now they can't pay their debts. A lot of these were smaller firms. They've taken in well over $200 billion in debt. And then there's the whole emerging market situation. But when you listen to the news close today on CNBC, they made the correlation between a diving Dow and diving oil. They even forgot China now. Before it was 1 and 1 was 2. And now it's just 1. Could anybody add up the other commodity prices that now, according to the Bloomberg Index, and I've been reporting on this, are at 1999 levels? Guess what, folks? 1991 levels. So yeah, you could bring the whole commodity index down, but they only choose to do oil because that's all they can add up to. Here we go. Net debt of 60 leading U.S. independent oil and gas groups, $206 billion. 86,000 U.S. oil and gas jobs lost over the past year. One fact after another. U.S. crude production rose from 5.1 million barrels a day at the start of 2009 to nearly 10 million barrels today. The number of rigs drilling oil wells in the U.S. has dropped 68% from its peak of October 2014. On and on and on. Almost a third of the 155 U.S. oil and gas companies covered by Standard & Poor's are rated B- or below, meaning they are at risk of default. Hey, it's not my fault. It's default. Hey, a little joke up a little bit. Anyway, a lot of people are losing their jobs. Again, the average high-yield energy bond has slid to just 56 cents on the dollar, levels touched during the financial crisis in 2008 and 2009, as investors brace for a wave of bankruptcies. You could see where this is going. Bankruptcies, and the banks are moving into bear markets. Big ones. Europe's new bank chiefs set to deliver bad tidings, one after another. Deutsche Bank's detail a $6.7 billion annual loss. And Standard Chartered, which has a lot of money in those emerging markets, they're talking about reporting an 85% fall in earnings per share. One lousy number after another. One bank's earnings, it's bear market territory for a lot of the big banks, and the ones in the energy sector, they're going to get even worse. Then you have this. Iran set to order 114 Airbuses in European business bonanza, also looking at buying from Boeing. Iran's going to be pumping more oil. Russia's going to be pumping more oil. The Saudis are going to pump more oil. Everybody's going to pump more oil, so the rig count goes down in the United States. Inventories could drop. There's going to be a flood of product on the market because the global economies are slowing. It's bigger than oil. And then just closing this up quickly, dozens of migrants drown as Europe is pressed to act. More than 40 people, including 17 children, died when wooden boats full of migrants trying to reach Greece sank. Again, no one's talking about who's causing this. The United States and its coalition of the killing by destroying Libya, Afghanistan, Iraq, and Syria. EU to block migrant flow from Greece. Another little girl here. Europe to press Athens to tighten borders. One after another. The Schengen Agreement, where they have open borders, they're going to change that in Europe. It's going to be harder to cross borders. This is the beginning of the end of the Eurozone. You're going to see it. Here, anti-immigration stance strikes a chord in Iowa, particularly with Trump. Hey, and how about that Trump, huh? Yeah, this guy could lie and get away with it. I saw thousands of people cheering over there in Jersey when the World Trade Center came down. Hey, how about showing us pictures? No, I don't have to. You said you saw it on TV. How come there's footage of it? Well, a guy wrote about it. That's not you seeing it. Hey, and all them folks that are coming over the borders, who are they? They're men. Yeah, hardly any women and children. Here, listen to him.
When I heard that, I saw the migration. And the migration was strange to me because it seems like so many men. There aren't that many women. There aren't that many children. It looked like mostly men, and they look like strong men. These look like physically strong people. And I'm saying, where are all the women? Where are all the children?
Well, the pictures don't lie. You see women and children everywhere. It's Trump that lies. Remember, campaign 2016. Trump or Clinton? Hitler or Hitlery? This is Gerald Celente, and that's some of today's trends in the news.